Hello, everyone. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'm pleased to welcome you to today's webinar, Understanding Financial Statements and Aspects of Presenting a Commercial Transaction. Please note that today's webinar is being recorded, so all participant lines will be muted during the broadcast. However, if you'd like to ask a question, please put your question in the Q&A box, and it will be answered by the end of the webinar. You can also click the raise your hand feature if you'd like to ask your question verbally. Our presenters today are Mohammed Ahsan with Quail Credit and Barbara Griffith with SCL Equipment Finance. At this time, I'd like to turn it over to them. It is all yours.
Thank you, Monica.
Thank you. Good morning from California. Thanks to AACFB to facilitate this event. And also thanks to all attendees who are joining us today. Hopefully together this morning, we will learn something new and we can use it in processing of a commercial transaction for a better result. With me is Barbara Griffith. She's the founder and president of SCL Leasing, Southern California Leasing, for over 32 years. And over the years, Barbara and I have been working together almost 25 years or more. And this is a great opportunity to share this experience with her and with all of leasing community. Over the years, what we learned, this is a time to share. We thought that way we can grow professionally and go to the next step. So mainly overall talking about commercial transaction, mid-market commercial transaction, we will go details, but overall we'll go how you process a transaction. And mainly when I see a transaction coming in, we're assuming it's 500,000 or more. First thing is that to gather and collect the documents, okay? And we'll go details on those documents, but gathering and collecting to complete a package makes the first step. Second thing I do personally is to, when we have the information today, this technology, I go to the internet and verify the borrower and their presence on the internet and the market. And then I verify the vendor, and also I verify the equipment. 40 years ago, when we started this business, or 45 years ago, I remember that app-only transaction, we used to have 17 pages of lease documents. Now we got 1 page. So there are technologies there, tools there that you can verify a lot of information from the third parties to able to build your package. Number 3, once you have done with that, then I go into financial analysis, looking into try to feel the pulse of the business and their financial health. So basically dive into the financial numbers, balance sheet and income statement, debt schedule, and try to understand what type of transaction and credit I'm dealing with. And on the back of my mind, I try to match that deal with my wider window of credit, the lenders.
Well, great. What I think we're going to try to have everyone understand is, as a broker, as I am a lessor, I sometimes have a customer who is coming in with, let's just say, a $750,000 transaction. So we want you to take away today is to feel comfortable asking for financials and what is going to be the bullet points that you're going to need to ask this customer for, and Mohammed will explain that. So if we just take this as an example, Mohammed?
Yes.
I have a client. He is a past client. He's been with us about 5 years now, making good payments on his leases. He's purchasing a piece of equipment of about $750,000. It does not meet with our app-only program. What would you tell me to ask the customer for? Because I know I'm going to need a financial package, but in the beginning, what do I say to the customer? How do I start that conversation to say, okay, Mr. Customer, I'm going to need some financial data. So before I even request information come in, what are the preliminary questions I could ask the client?
So you tell the customer that, hey, we've been doing business for all this time, and it's all app only, very quick and easy way to process it. Now that numbers is bigger, 750,000. Now that I have to look for a better competitive rate for you. And in order to be successful on this, you need some basic information from you, okay? Which is at least 2 years financial on the company and 2 years tax return, and then a most current interim financial. Okay, so that is the financial side. Now, I assuming most of our clients are small and medium size, okay? And you're dealing with internally prepared financial. To support that internally prepared, you need the tax return.
Can you tell me what interim financials mean versus audited financials?
Okay, financials, as you know, there are 4 categories of financial. One is internally prepared. Barbara prepared a financial from QuickBook or whatever it is. That's your internal financial. Then a little bit better would be a compilation, okay? And then compilation is, then after that, you go to a reviewed statement by a CPA, okay? And above that is the audited statement. But we don't see a lot of audited statement to be realistic, okay? We see reviewed, we see compilation, mostly internal. In order to support internal, we have the tax returns, okay? So you have interim statement, you have internal financial year-end, and the tax return for the related years, okay? That's the business side. Then you have personal financial statement, assuming they are personally guaranteeing it. Most of the small, medium, we need that kind of volume personal guarantee. So you get the personal financial statement, and then also 2 years personal tax return, okay? Barbara, one more thing, and you, as usual, sign credit app, 3 months bank statement, and a debt schedule, okay? So this really completes your full financial package. But once you gather and get that, then we are talking about the next step.
Okay, so my customer who is going to be purchasing food manufacturing equipment for approximately $750,000 cannot split the equipment. It's all one piece. I'm going to be asking the customer for 2 years tax returns, a current profit and loss and balance sheet, and a debt schedule.
Personal financial.
And a personal financial.
Personal tax.
Okay, I have a question, Mohammed.
Yes.
When does it come into play to ask for the personal? Why? Like, it's easy to get a 2-year corporate tax returns. It's easy to get the profit and loss and the balance sheet. It's easy to get a debt schedule, okay? But when we start asking for personal tax returns, I feel there is a pushback on the client's end. So with that being said, how would I get over that hurdle?
You've been doing app only for this customer and assume he signed personal guarantee, okay?
But maybe in some cases, he is not personally guaranteed. He has done just corp only.
Okay, now we're talking $750,000, okay?
Okay,
Now we're trying to get him a competitive rate. And he is the company, he is the majority owner, okay? Without him, the company, we don't know the status of the company. This is not a big, we're talking again, small, medium-sized company. So he is the main engine of the company, okay? And that's why we want his commitment, his support to the deal. And that's why our lenders would like to have him personally guarantee the deal. If
okay.
he has no faith and confidence on this personal guarantee, how would our lender do the deal? Spend their
Okay.
money investing on this guy.
Okay, so back to the customer with the $750,000 piece of equipment. I've now got in the financial statements, which is 2 years. They look relatively good.
Mhm.
He's looking for 750. I've got my debt schedule. And Mohammed, can you explain to me why I need a debt schedule?
Debt schedule is a table that lists your monthly debt, okay? So with that, it helps to track your cash flow. So basically with the debt schedule, you take monthly payments for current portion 12 months, and then you match that against your cash flow, which is net income, depreciation, interest income. You match these two to see the debt service coverage, the company, how they're doing, okay? Cash flow wise, can they handle this additional obligation debt? So that's the purpose you see. And the debt schedule really spell out the maturity, interest rate, and also it tells you what kind of rate these guys been booking and that.
This is true.
So then you can say, okay, I'm trying to get a 9% rate to guy. He got 4% rate, which is not available now anyway. But at least you know the quality of customer, quality of his borrowing, okay, or his ability to borrow in the past. So we can judge that and you can price accordingly when you give him a quote, okay? Or you try to match the lender which will satisfy his need, okay?
So on the debt schedule, I remember one time when the two of us were working on a transaction and the debt schedule had a lot of loans and leases, and his income was not, it was less than what the debt schedule needed. But the caveat to that debt schedule and finding that debt schedule was the fact that he was going to pay off a majority of those leases within 6 months. So that added to the financial statements because you could explain, or we could explain to the lender that this debt is going to be paid off in 6 months.
Question is how he is going to pay off
Well, the
debt.
leases were up.
Oh, leases are,
Yeah,
okay,
they were expiring. The debt schedule can also show you when the,
Okay, maturity date.
yeah,
of
the
debt.
maturity date.
Okay, we can point it out to the lender that, look, even though the debts are here, but these are going to be all paid off within 3 months, okay? So this debt is going to be eliminated. So therefore, it makes sense on the cash flow wise, okay? Now, as I said, overall, once I have gathered the financials, once I review and analyze the financial statement, and then really for a commercial deal, you have to do a good write-up, okay? You have to do a presentation. What goes to the presentation? You have who the borrower is, okay? You're thinking about the underwriter. When you submit it, it's not like an app only. They got to figure out what this deal makes sense. You just make it easier, and really, if you do your homework at the front end, it would be easier to process, and you will have less questions from the lender, and you will have a better result, okay? So what goes under the presentation? Normally, it works for me is who the borrower is, what the amount is, what are the terms, okay? What are the structure, and who the PGs are, types of request, whether it's a EFA or a true lease or a capital lease, you spell it out, okay? And then what is the equipment, what we're dealing with, okay? And rate requirement, any progress funding, financial justification, very important, financing justification, why they need the equipment, okay? Here is a place you can really shine. You can tell that, okay, this equipment will save him this much labor, okay? And this will give him this much higher the volume. That will in turn bring him more profit on the bottom line. This will satisfy his new contract he got, okay? In order to do that, he's justifying this equipment. So these are the things you got to, who the vendor is, okay? And you have done already the verification of the vendor through the internet, okay? And bring all of those files to your file presentation, because these days electronically just transfer and share that with your lender presentation, okay? Because it brings a lot of credibility that you have done your homework and you know the equipment, you know the vendor, and so basically.
So would it be fair to say, Mohammed, that as I'm looking for these financial statements and I'm talking and I'm looking through the financial statements. I'm trying to find one thing among many, but one for sure thing is to represent into the underwriter's hands the ability to pay back. What is the ability for my customer to pay back this loan once he gets a loan for 750? Would you say that I could key into those financials and say,
Yes.
where is the ability to pay
We
back?
will dive into that a little bit later. We'll
Okay.
use one example where to look for the financials, okay?
Okay,
And what are the positive plus, okay? Every deal will have positive, every deal will have some challenges, okay? You can identify the challenges and explain to the lender, underwriter, that this is challenges here is that we resolve this, or at least this is the supporting doc will be plus for this company. So the presentation wise, as we said, financial justification of the equipment, vendor, any takedown, closing date, what is the broker fee? As you know, app only deal, you got 10, 15 points fees built in, okay? It's normal. But that bigger deal, $750 million, $2 million deal, my experience is typically lenders will go 2 to 3 points max, okay? But you're dealing with a $2 million deal, 2 points is not bad, okay, overall. So you got to do a little bit more work, but that's how you have to identify that, okay, I need 2 points, I need 3 points on the deal. Other way you can do it is as per policy, okay? As per policy, you may leave some money on the table, okay? So you got to point it out there and see how much fees you're looking for. Then comes to background on the company. And here you talk about the owner, establishment, when this was established, their experience, who their clienteles are, all kind of stuff you can put it in under the background, okay? And the history of the company, anything positive, negative, address that.
so
Then-
let me recap. So I am going to have the conversation with the customer, and we're just going to talk about the financials. And then I'm going to request 2 years corporate tax returns. I'm going to request a balance sheet and a profit and loss,
Yeah,
an interim. And I'm going to ask for a debt schedule.
yes.
And I'm going to ask, depending on, well, that's my next question, organizational chart. Do you recommend, or first of all, can you tell us what an organizational chart is? And do you recommend us requesting that up front in our original request?
Listen, you are transiting from app only to commercial. If you ask too real world situation, if you ask too many things, customer will be overly concerned, okay?
Okay,
You're talking about plan of the business. Why you ask for the plan of the business? I don't ask for it unless it's a new business, okay?
okay,
Plan projection, I don't need it because I have historical numbers. I can see the trend, how they're doing, and I have enough element there to support the deal, okay? As far as organizational chart, yes, sometimes we do, if the deal is too complex, okay? You got 4 or 5 companies going on, this one owns that, this one owns that, then you need to have a clear understanding who is doing what, whose support we need, who has the who have the strongest financial, and we need to tie them up as a cross guarantor. That's how we try to get the organization chart, okay? But you got to keep it simple and practical, okay? And you don't want to lose that customer because we are a sales organization too at the end of the day, okay?
right,
And we got to know enough of these financial numbers, enough of the deal that you can negotiate with the customer over the rate, because there's going to be rate issue come up. So
right.
you can say, okay, because of these weaknesses here, the cost, risk and reward, we need to reward our lender for this, okay? Then they will appreciate, understand, and then appreciate your professionalism that you looked into that. That's why you have to learn the financial statement. Okay?
So we will probably only ask for an organizational chart if our customer is telling us that they have other owners of the company, other investors that own other companies. So there's multiple owners in a company. You might want to understand the organizational chart.
Correct.
So with that being said, again, we're going to back up just 2 years financials, personal financial statement, personal tax returns, profit and loss and balance sheet. Now let's talk about the credit history. I know that a lot of people are depending on PayNet.
Mhm.
How important is it for PayNet to show in a positive light? I feel like in today's environment, we're getting, even with our better customers who can go app only, PayNet isn't showing well. I'm not sure why that is, but do you believe that financials can overcome PayNet?
Well, PayNet is becoming a major decision factor in our industry, okay? App-only scoring model, they all go with the PayNet, okay? And you and I don't have control on that, okay? We're not even a subscriber unless you're a lender and you have your own portfolio. But PayNet is a reflection of how they're paying the comparable borrowing and historical numbers. So that is very important, okay? The size of the PayNet, okay, for 620, 650, 675, 680, it all depends on the different lenders. They have different way to skin the cat, okay? And they have different criteria, goals, and they have to have it. So we don't have much control on that. But if the PayNet is bad, then deal has a challenge, big challenge, okay?
But maybe the financials would help.
We have to prove it, we have to support it. And it has become a very dominant factor on decision-making for app only as well as commercial deals, okay?
Okay. And what about collateral? Does collateral play an important part to taking a look at the financial statements?
It depends on the lenders. You know, if you're talking about A lenders, they will be a credit lender, okay? Collateral plays a role, but not significant because they will do a software, they will do IT equipment, and then their machine tools doesn't. But the B and C lenders who really rely on the collateral, they see what the resale value in the event something goes wrong, that plays a role, okay?
Mm-hmm.
Obviously, hard collateral will have a better acceptability than the soft collateral, okay?
Mm-hmm.
But a stronger credit soft collateral will work on that.
Mm-hmm.
One thing I wanted to tell you is that reviewing the financials and overall picture is like touching the pulse of a company, okay? And see how their financial health is. And we need to, as we grow from app only to commercial side, we need to professionally grow as well. We got to learn that, okay? So that you can argue, you can present it, and you can sell your transaction, okay?
Mm-hmm.
And then other thing is that, again, as I said, you know, this session, we are all a small leasing company, medium leasing company. We're a sales organization. We are not trying to make everybody as a financial analyst, okay? But you got to know enough of that so that you can understand and present for your lender as well as your customers, okay?
Right.
So that's basically on that
Asking for
part.
the financial data, doing a nice write-up, and putting it to the eyes of an underwriter so that they can understand your transaction. And just recapping, if you see challenges in the financials, then you should point them out. If you see pluses, you should point them out. And do you believe that someone submitting a financial package to a lender should have a 2-3 page write-up? How long is this write-up, and how, you know, I don't do a big write-up when I do write-ups. I try to really bullet point it so that they understand the transaction. But I have seen people who do 2 and 3 page write-ups. Tell me that.
Reality is each lender has their own way of skin the cat, okay? They will do their things. You present enough information so that the deal flow can go through. They understand exactly overall macro view of the transaction, what's going on. I normally do a couple pages, okay? And then it just bullet points, okay? It tells you who the borrower is, what their address, website is important so they can get more information, amount, what type of deal you're requesting in, okay? What kind of rate requirements, equipment justification, okay? Who the vendor is, and what's your fee requirements. And then I go into background and history of the company, a little bit paragraph writing, what they do, what kind of product they do with that. And then I go to the financial information, financial presentation. It talks about, you know, you mentioned about the interim statement. I take that interim statement, I take the sales volume, I take the major expenses, depreciation, and come to the net income, okay? And then on the balance sheet side, I look at the cash flow, cash, receivable, inventory, current asset versus current liability to establish a working capital. Okay, that's a selling point for that. And then I go to the equity of the company because and see how much debt they have, okay? And then the current portion of long-term debt, okay? Figure out 12 months what they're going to pay versus what their cash flow coming in, okay? Net income and depreciation and interest expense. And then I also look at the equity of the company versus the debt, okay? So the debt to equity ratio, how leveraged the company is.
Debt to equity ratio. Could you explain that just a little bit better? Debt to equity ratio.
Okay, so basically, anything if you have $1 you borrowed and you have $1 equity, you have 1-to-1, okay? So
Okay.
you are very good. Smaller the number, better you are, stronger you are, okay?
Okay.
If your leverage goes higher,
So you have a
then that-
lot of debt.
yes, then your leverage would be higher, okay?
Okay.
So then it is a risky scenario, okay? But certain industries have a certain amount of leverage scenario, which is understandable. Rental companies, professional companies, and they are basically will have a normally a higher leverage compared to others. So you keep in mind when you're looking at it, equity to total debt, how leveraged the company is, okay? So
Would a profit and loss like we see here on our help us understand that?
profit and okay, income statement is on the other hand is a company's financial performance for a specific accounting period. That's the income.
So right now
statement.
we're looking at a year-to-date balance sheet and profit
I
and
will go.
loss.
I'll get into that.
Okay.
And that the balance sheet, we're talking about debt to what is a part of the balance sheet.
Okay.
Balance sheet is basically serves a snapshot of the company's financial position. Okay, it reports on a company's what they own and what they owe. Okay.
Okay.
So basically, leverage part comes from that, and the income is so. Again, on the balance sheet, current portion long-term debt, what due within 12 months, how much money they need to debt service versus the cash flow, that you compare on that, okay?
Okay.
And that's how you figure out how this company is
On the
gonna-
balance sheet.
Right.
Okay.
Let's go to this financial example that we have, okay?
Okay.
And then that way we can, since our event is, today's discussion is more on the financial statement discussion. Let's look at this balance
So let
sheet.
me just recap here. So now we've gathered all of our financials and we're going to start analyzing them, and Mohammed's going to help walk us through what are we going to look at in order for us to present this to a lender. So we need to get a good feel on the profit and loss statement so that we can understand the customer a little bit better.
I'm looking at this balance sheet and I'll take information, and at the side, I'm going to take some note, okay? Here I'm looking at it as a balance sheet, which again is a statement of financial position, serves as a snapshot, okay? Represents what owed and what owned and what owed, okay? And this is, as you can see, this is internally prepared financial, okay? It's not a compilation, not reviewed, not audited.
QuickBooks,
right?
it's probably
Yeah,
QuickBooks.
so this is prepared by them, and looks like a fiscal year-end number. And I'm looking at the assets, and then assets consist of what the elements in the asset side is: the cash, receivable, inventory, equipment, prepaid expenses, goodwill, investment property, marketable securities, things like that on the asset side. So I look at it, these numbers, they have a $446,000 in the bank, okay? And they have a receivable of $578,000. Here's the question: from whom? These receivables, if you go a little bit more further details, which sometimes we do, sometimes we don't, are they under 90 days or over 90 days? If it's over 90 days, it's not collectible, okay? Problematic. So that's probably
So would
not
we
a very
ask-
good, that would be an intangible type of item, okay?
So how would we know if those receivables, we ask the
Sometime
customer?
your lender will ask that, or you can ask them, hey, what is these receivables? Is
Because
that
we-
coming from your genuine business, genuine outside third-party customers? Or it is a related party
Oh, good
receivable?
to know.
If
Got
it's
it.
a related party, it's probably intangible because it's not collect. I mean, we don't know the payment term, and then really when you need it, you cannot collect it, okay?
Okay.
So that 578 is a big number here, receivable. And then prepaid expenses here. And then I see that aircraft parts inventory, 674. They're in a charter aircraft management company, helicopter management company. So this is the inventory parts and stuff they keep in it. So that's a item. Hopefully it's not obsolete. It's a good inventory. So I'm taking a note on that. Okay. Cash position, receivables, inventory. These are all part of current asset. Okay.
Yes.
And
So
then
inventory is going to be considered an asset,
yes, it is an
even
asset.
if that inventory isn't resellable, but they're using it internally.
Internal purposes, raw materials and stuff for further
Okay.
production, or final production they do. Okay.
Okay.
That is a readily available market for it. You can resell it if you need to. Okay. So what we got here, we got cash, we got receivables, we got inventory. Okay. And then on your head, we figured out, okay, these are the total current asset of the company. Okay. And then I go next page. What are the current liabilities? Okay. The difference, Barbara, between the current asset and current liability is the working capital. Okay. See, the company has a positive, healthy working capital. Okay.
Okay.
If I have something like that, I calculated that I put a note there and I'll put it on my financial write-up to the underwriter presentation that, okay, company has this much current asset, current liability, and a positive working capital. Okay.
Oh, very nice.
Going to the
Okay.
next one, the fixed asset, they said aircraft and camera equipment, they got almost $13 million.
Whoa.
So they has to have, which we know that they have about 5-6 helicopters and then other stuff which they charter, and then they do the photo shooting, they do commercial and stuff. So they have the equipment there. And then also they showed over the years, they depreciated almost 5 million of that. Okay. Here's a scenario. If you have an asset which is a book value of 12, and then depreciation wise, the difference is the book value here. Sometime asset value could go high, okay, higher than the book value. As an example, real estate. If you bought 10 years ago a piece of real estate at a book value 1 million, today that real estate is 3 million. Okay, even though the book value showing lower asset, reality was you pointed out that to the lender. Okay, this asset, the book value is this, real market value is this. So the company's equity accordingly would be much higher. Okay, so I pointed out on that.
In a write-up, then we would note the assets, and in this particular case, we would note that he's got the helicopters as an asset, and if he had real estate, it would be an asset. So we're right back to the ability to pay back, and if he had a bad month or a bad 3 or 4 months, he would have assets to help pay for that new lease.
Now, in this case, Barbara, if he had IT equipment software as an asset, and that's the book value, that asset probably don't have any market value right now. Okay.
Okay.
Compared to this helicopter or aircraft, they retain good resale value, even though they depreciated, but real market price could be higher than that. Okay, I pointed out that to the lender that his assets are concentrated. He depreciated a significant amount. However, the market value of these assets are still significant. Okay, so that goes on the now on the liability side. They got accounts payable, and accounts payables are treated as a part of the cash cycle. Okay, not a form of financing. And this is amount owed to the supplier and then goods, the services they have. So this is not the short-term liability part. Okay, so accounts receivable payables are there, which matches with the cash position on the company. But here you try to figure it out. Loan payable, they put 1.8 million. I assume that loan is under current liability. Okay. So you got to figure out, that's how the debt schedule comes in. How much is the current liability of this company? So, and then they have other long-term liabilities. I see here some $1.2 million loan for the bank under the long-term, and also they have loan payable 4.7 million. So they got some debt here, okay? And those debt, long-term debts are not, they are long-term. They're not due within 12 months or 60 months. They probably EIDL loan, we have that EIDL emergency
PPP program
on that. And then all could be SBA loan, okay, which has a 30 years term, real cheap rate. So so you figured out that, okay, which one is, or could be mortgage loan long-term basis. So you figured out, okay, how much is the current portion long-term, how much is the long run, and then you try to figure that out against your cash flow purposes, okay, to see how they're doing on that. In this case, this company looks like about 5.9 to 1 debt to worth ratio, okay? So this is kind of a leveraged type of situation here, okay?
Yes.
Again, certain industry, rental, commercial aircraft and others, the leverage is a little bit higher. It's okay on that case, okay? Now we go into the income statement. Again, income statement reports the company's financial performance over a specific period of time, okay? Year-to-year scenario, okay? So this is, again, internally prepared, and we look at the revenue side. We see where that income coming from. They have a helicopter charters income of 1.5 million, and they got helicopter tours 1.1. So we know what kind of, where the most revenue is coming from, okay? What kind of company is it? So we look at to that, and they have total income listed 4.3 million. And then all these cost of goods and expenses here. I look for depreciation expense. They didn't put it in here, but other expenses are like normal stuff. They have staff expenses, helicopter maintenance expenses, fuel, and insurance is a big part, $500,000.
So
All of these things. So they show a bottom line of a gross profit of 1.3, but the bottom line of
I have
about
a
700.
question.
Yes.
So now I'm looking at this profit and loss and I'm seeing their expenses. And the customer is purchasing a piece of equipment that's going to replace some of the expenses on his profit and loss. Would that be a good thing to note to lender?
Okay, so your customer, not this one, but
Well,
your
let's just say this one. Let's say that he's got X amount of dollars,
okay.
but this new piece of equipment is going to replace some of that expense.
Not necessarily. If this new piece of the equipment replacing an older unit, it
Okay,
may replace some of the maintenance cost and that type of
gotcha.
thing. And then it may bring a little bit more revenue for him too, okay, replacement. But if it's an additional piece of equipment, yes, definitely it will capture more business. It will bring more revenue volume for him, okay? And that's the bottom line, right? Basically, now your question was whether this one will replace some of the expenses. Yes, if it's a high-tech, say, forget about this piece of equipment, say it's a machine tools, okay, automation. So instead of 3 people working on that, right now we have 1 people work. Yes, he will save the labor. You can tell that this will save his labor cost, operating cost, okay? At the same time, it will bring more volume to him.
Well, let me just make a footnote on that. I am seeing a lot as a broker, people moving into technology. We have to move into technology. And most of the cases, it's always a write-up of how they're going to replace existing, well, having to add on new employees and even existing ones, because existing employees age out, right? And if you don't have the proper equipment to replace older, employees, and so that's a good justification of a write-up. Is this equipment going to help the company's payroll? Would you say that the payroll of a company is always really large? It's pretty large. I think it's a big expense for a company, and reducing payroll costs is an important line item, I think, to a lender. That's my opinion. I don't know.
It depends what they do, okay? If it's a labor incentive company, then somebody packaging, fulfilling company, right? We have done few deals in the past,
Right.
okay? And then what we also did, you did that too, and I work on that deal, is that you did a packaging line, okay?
Right.
The leveling, packaging, automation, okay?
Right.
That really saves a lot of labor cost, okay?
Right.
And that is the company will do eventually as they grow and they have competition. They need to automate it, reduce their operating cost, okay?
Okay.
So I remember of one of your transaction going to San Bernardino. They have like 400,000 square feet facility. It's all automated, and we did the financing of, I think, $1.2 million that transaction. And it makes sense because these days anything you do online order, somebody has to fulfill it, okay?
Right,
And those are the equipment that
right.
they used it.
Is there anything else on this particular profit and loss that you'd like to pay for us to pay
Only thing is, I
attention
would
to?
say that the bottom line here shows 776,000. Okay, there's the interest expense of 408. The company does, if you take this way, company does 1.1 million cash flow and about $900,000 current portion long-term debt. Okay, so yeah, it is covering that scenario. Obviously, this equipment, you can argue that it will bring more volume, okay, for this company. So its cash flow will improve with this volume. Okay?
Well, I know that those who are here, and we have quite a few people listening today, are going to have some questions. And so we're going to, I think, open it up to questions. We kind of went over that. So in a recap, lender seeks insights to the business objectives, strategy, market analysis, and financial projections. So do we have any questions right now that we can take?
We do. One, they want to know if they can have a copy of the presentation so they can help train their team. So,
Yes, and yes, we can have the copy of the, but as you see, we talked about it. We really did not follow it. We think outside the box. So we went on a real life scenario, what happening, how to present it, and keep it simple, keep it really more practical, okay? And so we'll follow these things, but keep in mind, you gather the information, you read the financial, analyze, review, analyze, you present, and then you coordinate with the lender. They will have some follow-up questions, and you do that, and hopefully that will result you a positive
So what I
decision.
would suggest, if a company is wanting to train salespeople to be more comfortable with financials, this is why this particular webinar is on today, but just grab some financials inside of your company and start looking at them, very elementary wise. As Mohammed mentioned earlier, we brokers, we're great at app-only programs, right? I know I've been doing this for 30 years and I'm really good at that, but ask me to collect a financial package, I sometimes stumble. So, and to read them, I still not great at it. So, just, mock up some very simple financials, like how much revenue, how much expense, and where those expenses are, justification of the equipment, and then ballpark it into whether or not they can afford the equipment. Is there any other questions?
What information is needed to create a pro forma?
Generally, Monica, pro formas are relates to my experience wise on a startup scenario, new business. Okay, you have a starting balance sheet, but you don't know because you don't have any historical numbers for the sales trend. So then we just say, okay, you got great management, great idea, great equipment. Show me how this projection look like. Okay, next 3 years. So a lot of reality wise, a lot of A lender, B lender will not do those deals. Okay, they want the business has to be 3-4 years or more. But there are lenders who will look at the projections, okay, and look at the management and the investment balance sheet and say, okay, let's see the projection, and based on that they will do a deal, okay, and that may need some structure on that transaction,
Right.
okay.
Well, let me tell you that Mohammed and I did work on a transaction a few years ago, and the company's revenues were about $3 million, but they were also buying $3 million worth of equipment. So we go to I packaged it, understood kinda what I was doing, and I did send it over to Mohammed to review. And when we were able to get it closed because we had the projections. And what the lender liked in the transaction was the leadership team. They were a vitamin manufacturer, right? And everyone that worked in the company was a scientist. And they also had who their sales were and how their growth was going to happen. So the lender who bought it bought the projections and the leadership team. And today.
And
Go ahead.
then one other thing that Barbara and we drove 60 miles to see the facility. And the site visit is very important too, okay? One thing, it's good for us as a broker that we don't know, we don't have the crystal ball to see 60 months how this deal is going to do. But day one, equipment supposed to be there was there, okay? That we wanted to protect that, okay?
Right.
And whatever we do, deal is a deal. A few thousand fees is not important, but we got to protect our relationship, trust and integrity to our lenders, because no relationship is good if our lenders lose the deal or losing money, then it's not going to last. So we have to really think about it that, hey, how do we're part of the team, how do we protect the lender, do our part of due diligence, and be able to walk away from the deal if it doesn't make sense.
Right. Is there any other questions, Monica?
Yes, what are some red flags that you look for in financial statements?
Well,
That's a good question.
Yeah, you look at this, first of all, one thing is that it's internally prepared, okay? So you have to keep an eye, you're mindful on that, okay? If it's not reviewed or audited, then internally prepared financials is one. That's why we get the tax return to support that, okay? You look at the negative retained earning, okay? You look at the negative net worth of the company. You look at the cash flow shortage, okay? These are the red flags to me, saying that, okay, here, cash position is kind of low. Again, quality of receivables, quality of inventory, if you know more, is not good, then these are all over the problem.
Is there any other questions, Monica?
Matthew's asking if you have a template that you could share for putting together a personal financial statement.
A template. We do.
Yeah, we can do that. We can.
I have one that I use and I just send to the client. It's very, very minor, but it gives a snapshot. And so you can develop one of those.
Or to make life easier, a lot of time customer has already a personal financial statement. We can just, he can update that and sign it, date it. We can use that. He doesn't have to go through that process again. We'll take that one. So basically it tells you all your assets, all your liabilities, personal level, mortgage and everything, and then you show his personal net worth, okay? We're trying to get the positive and selling point. So as long as he has liquidity, he has positive net worth, okay, then it helps the transaction.
Like if the personal financial statement shows he's got a lot of real estate, has a lot of income coming in on that, that's not going to the business, but is his and personal, then the lender feels a little bit more comfortable saying, hey, even if the business has a hiccup, he personally can come in with
then
money.
the personal liquidity will show his personal liquidity. It shows that, as Barbara mentions, he owns some rental properties. There's outside income coming in too. So he's not depending if he has a hiccup. He has other means to cover that. Okay.
Any other questions, Monica?
Someone want to know if you had a checklist, I guess, if you're like a checklist of things that you're looking for on the financials.
Yes, if you're a broker and you have a team, or a lender and you have a team, but anyone, you can easily put together a snapshot of what is it that you require. And because again, back to the broker, we're not good at asking for financials, but we need to be better at it. The reason why we need to be better at it is because it's hard. The cost of equipment has increased and our app-only programs have decreased. And we have to if we have a client, we have to do the best job we possibly can. So if you do just a sheet, and Mohammed, correct me if I'm wrong, but what I ask for is a brief description of the operations, okay? What the justification is, and you can write this down as I mention it, what the justification is for the equipment, 2 years tax returns, 2 years tax return, profit and loss and balance. Now, I'll take that, as something I'll request initially up front. I may not even go to the personal financial statements, but I will mention to them, we may need 2 years personal tax returns. But let me take a look at this. Once I take a look at that and go through what Mohammed just mentioned, which was going through the balance sheet, what their assets versus their liabilities, going through the profit and loss, understanding where they're spending their money, looking at their 2 years corporate tax returns or tax returns, then I can understand if we're, then my next step is to see if I have something here and then maybe go to the personal tax return. So I just asked for that initiative, initially. What do you think about that, Mohammed? Because remember, we're not good at asking.
We're going through this, and on the back of our head, we are trying to match up. And as you know, I don't have to tell you, in this business, you got to have options, okay?
Yes.
You have to have lender 1, 2, 3, because at the end of the day, you may not get that what you're expecting for. So you got to have options in order to service your client, okay?
Right.
And so basically, you go through this process, you match the lender, and you work with that lender or the next lender to see whether you can get this thing done. In the process, maybe they're going to need some structure. How do you structure a deal?
Yes.
Structure the deal, maybe they will take a big advance payment, okay?
Okay.
Part of the deposit, down payment, whatever you call it. Some lenders will take few payments up front, okay? Some lenders will take additional collateral, free and clear collateral to support the deal. Somebody will take equity on the real estate, which is really going away. Not too many lenders are going into that path these days. Then some lenders I've seen, they will take a letter of credit, which is, again, could be a way to structure a transaction.
So structuring is very important. And that's another bullet point. So when you're putting what you request, which is 2 years financials, profit and loss and balance sheet, and you have to find out whether if they're a little bit light on that, well, how do you structure it? Can they come up with 10% down? Let's take a look at the $750,000 a customer we talked about earlier. Would he put $75,000 down?
They have to have the skin the game, okay?
Yes.
And by their money, putting that money, pledging something, supporting the deals, then all of this thing helps for the lender. We're trying to mitigate the risk for the lender, okay?
Right.
So that's how we structure it. And sometimes the vendor too, which realistically not happening that much, but vendor could play a role too. Vendor say, okay, I will do a remarketing for this equipment. If it come back, I will take care of that. Or maybe you can hold back my money for 12 months. Okay.
Oh, wow. Okay.
So because I need to sell that equipment, I'll do this. All of these elements, you can do this structure transaction.
Well, we're just about at the end here. So I wanted to make sure we answered all the questions. Is there any other questions, Monica?
We have a few. Would you be able to move to the next slide? Because I think that is your contact. Oh, to the last one. I wanted to have give everybody your contact information in case they had questions later on that they didn't get answered on the webinar. Do you mind if they email you?
Yeah, contact me, because at this stage of our experience and life, we want to share with them, okay? And I believe in more sharing, you will get more back, okay? So yeah, we're available. Give us a call, and then we'll try to answer the best we can.
And I'm just going to give Mohammed, Mohammed is one of the best in the business, and he's very gracious about helping educate teams. And you can trust him. And so I really want to thank you, Mohammed, for being the person that you've been all these years.
Thank you. Thank you.
We appreciate it.
Just a regular guy, try hard. That's it.
Regular guy that tries hard. Okay.
Several people are asking for forms or templates or checklists. And if you have anything like that that you could send to me, I'm happy to forward that to the people who registered. And then again, if anybody wants to reach out to either one of you, they can grab your contact information.
I have a format here. I'll send it to you, Barbara or Monica, and then they can share with, so at least write a format, okay?
So Mohammed will send Monica the form, and Monica, you can disperse it as you see need to.
I did have one question. Said, would this apply for startup businesses with high net worth PGs?
PGs, okay.
So you have a yes, if you have a startup, and right now we see a lot of startups. Some of the things that I'll ask is, how did you start this company? Because if you really listen to them, they've had a previous company, something similar to this. They're just not like, cooking hamburgers and then all of a sudden became a vitamin manufacturer. They have a history. So you're going to sell the leadership team. You're going to look at their high net worth, right? And you're going to have, again, the ability to pay back. What is the ability to pay back? If you're, I always say to the clients, your dream isn't the lender's dream. The lender's dream is for them to get their payments. Your dream is to get this manufacturing company off the ground. So you're going to have to be able to guarantee the equipment financing program based on your dream, because again, their dream is that you make the payments. So if it's a startup company, the ability to pay back, I would say that. If they're a high net worth company and they have the ability to do a letter of credit or something with the leadership team, I think it's worth a conversation for sure. At the end of the day, every transaction is doable.
Correct. That is very correct. Every deal has a taker, okay?
Every deal has a
now
taker.
at what cost? That's a question. Okay.
That's the question.
So yeah, you are risky deal, you pay the higher rate, okay? But you're right. Unless the deal is really trash, every deal has a home for it, okay? Depending on what A, B, C categorize, where do you go from there?
Yep.
Okay.
True. Well, we hope you learned a lot today. Monica, I guess if anyone has any other questions, maybe Mohammed could answer them, or I'd be happy to if they came from me, but I'm the broker who always depends on somebody who knows that area a little bit more than I, and then the blend just works really well.
Yeah, I would say, I think a lot of our broker members, they collaborate with other brokers, and, that teamwork just makes all the difference. So,
And then association plays a big role to that, okay? Because you bring everybody together for common purpose, okay? And as I told Barbara, there was a point where we were competing each other, and we becoming more maturing, and competition become cooperation for us, okay? There's enough business for everybody to leave and stuff, and then help each other. So this is really beautiful. It's really good.
Yeah. And that's why I've always belonged. I've belonged to AACFB for many years, and when it was NALEB, and when I first started my company 32 years ago, I always belonged to an association, because that's how I learned and that's how I met people. And without those people, I wouldn't have been able to withstand 32 years. So, being a member of Monica, and thank you, you've done a wonderful job too. So I'll see you at spring conference in Phoenix.
absolutely.
Thank you.
All right. Well, thank you.
Thank you so much
Thank you for your time and your expertise and sharing that with us. And thanks to all our participants. That we are recording this webinar, and it will be up on the members only section of the AACFB website in case anybody missed it. We look forward to seeing you guys in April at our Phoenix conference, and we'll see everybody on the next webinar.
All right. Thank
you so much.
Thank you.